Hi friends, today we are going to discuss here cash flow statement. Are you ready? Yeah, cash flow statement is a statement that shows flow of cash and cash equivalent during period under report. That means during the financial year. Statement that shows net increase or decrease of cash and cash equivalents under each activity separately. So here we can say that's operating activity, investing activity and financing activity. So what is this operating activity? What is this investing activity? What is this financing activity? Take a small journey through that. So operating activity means what is the main operation of a business? Take a large cake company. So they are preparing the cake. Cake manufacturing is their main operation. What are the expenses and income occurring for that particular purpose? That is the operating activity. And how much cash is coming? That is a cash inflow. And how much cash is going from the organization? That is a cash outflow. Give an example of cash inflow. We are conducting sales, we are getting cash into the organization, so that is the cash inflow. And we are purchasing goods or giving salary or rent or any other type of expenses, that is the cash outflow going outside. So cash inflow relating to the operating activity. Next, what is the investing activity? We want to invest our finance to the long term asset, so fixed asset. So that is the investing activity. If we are having the surplus fund, we can invest in the outside security also. So that is the investing activity. If you are selling one asset and getting amount, that is the inflow of cash. If you are purchasing one asset and spending amount, that is the outflow of cash under investing activity. Well, investing, we will receive interest, uh, dividend, etc. That's also coming under the investing activity. If it is a inflow or outflow, think and decide. Okay, next, financing activity. The business need finance for conducting their business. How they are getting? They are issuing their shares and debentures, or they are taking loan from the financial institution. Those activities that finance inflow means we are taking loan or issuing shares or issuing debentures, etc. inflow, and we are making redemption or repayment of loan, etc. are the outflow of cash under financing activity. Here also, if you are making the dividend payment and interest payment, etc., that's also coming under the financing activity. That's outflow of cash. Okay, if it is inflow or the outflow, just you have to think and then tell. So I think it's clear various activities, operating activities, investing activities and financing activities. If the company is a financial company, that means a financing company, that Muthutia Finance is like that, their regular business is a purchasing and selling of the securities. At that time, this purchasing the security, selling the security as the part is the part of their operation, that should go to the operating activity. That should not comes under the category of financing. Just take a care at that area if that company is financing or not. So how to prepare, how we can prepare the cash flow statement? Here I am saying that step fully and detailed discussion we will do afterwards. So first, preparation of cash flow statement. Cash flow statement is prepared the following step. First, compute the cash flow from operating activity. Then you are calculating that investing activity. Then you are calculating the flow from the financing activity. Afterwards, what to do? After that, each activity we are getting, that is the first one, the added cash flow statement, and the resultant amount is called the net increase or decrease in cash and cash equivalents. Okay, we are doing all those things, these things, and then afterwards we are adding these three. That time we are getting this amount, this heading. What's the heading? Net increase or decrease in the cash and cash equivalents. Okay, from the cash and cash equivalents, that balance, the beginning of the period is added to the cash flow arrived through the step. From then we are having, that is a cash and cash equivalents balance in the our balance sheet. Add this amount plus that cash and cash equivalents in the balance sheet. Opening cash and cash equivalents in the balance sheet, At that time, you will get one balance. That balance should be equal to the closing balance, closing cash and cash equivalents. Okay. What is the step first? First, we have to calculate this cash flow statement, all those things. Afterwards, we are adding, we are getting net increase or decrease of cash and cash equivalents. Then we are adding along with this one, we are adding cash and cash equivalents opening balance from our balance sheet. You should get a closing balance as per the balance sheet. If any items are reported in a significant investing or financing transaction which do not involve a cash or cash equivalents in the separate schedule of cash flow statement, we have to disclose all our information. So if the amount is no cash flow, we can show through the separate schedule in the cash flow statement. So we are getting a little idea relating to that. How now we are going to prepare cash flow statement preparation. Just the explanation only I am doing here. Next the next video we can prepare one cash flow statement from the question. So cash flow from the operating activity, cash flow from the investing activity, and cash flow from the financing activity. First, I am going to the cash flow from the operating activity. For calculating this one, first item we have to calculate net profit before tax and extraordinary item. Net profit before tax and extraordinary item. That means we are getting surplus. Okay, we are getting surplus or profit. Okay, that surplus or profit means after the all calculation and in non-cash item, non-operating item, everything we are adjusting. Finally, even tax payment also we are conducting. Then only we are getting that surplus. If that is like that, we have to add back and find that how much is the actual profit we received during the year or we earned during this year. Not for that only, we have to calculate the cash flow. How much is the cash inflow and how much is the cash outflow from the separate activity. Okay, so if one cash flow is not from the operating activities, deduct that one, and from where it is involving put into that header. Keep this much point in your mind and then come here. This calculation we are doing as a working note. Okay, note in cash flow statement, outside the cash flow statement we can do. So first we have to take the statement of profit as per the profit and loss or difference between the closing balances or opening balance of the surplus. We are taking that one and then adding all transfer all reserve add what are the items already we deducted from that profit, add back all those things. What are the items here? Transfer to the reserve, how much money we transferred from profit to the reserve, add back that one. Dividend, proposed dividend of the previous year paid during the year. That means we are proposing the dividend to our shareholders after getting the approval from the shareholders through the annual general meeting. Then only we can show that one through our books of account. So this proposed dividend previous year and current year we will get. Previous year proposed dividend only we are adjusting here. We have to add back there along with the profit to calculate the net profit before tax and extraordinary item. Then this one we can calculate. Let's say we are giving the dividend, so we can show at that dividend giving which one will come, that is the financing activity. Under the financing activity, outflow of cash, we can show that one. Okay. Next one, it is the interim dividend paid. Interim dividend or final dividend, any dividend we are making the payment, that dividend already we adjusted in our profit. So we are back calculating back, adding back here. This also we can show there where financing activity. Then provision for tax in the current year. Okay, provision for tax also current year provision is there, previous year provision here. Current year provision add back here along with the net profit before tax and extraordinary item, and previous year previous year provision for tax treat as a tax paid. Okay, previous year profit provision treat as a tax paid. I think it's clear. And next, any extraordinary item is there. What's this extraordinary item? So suddenly something happens, goods destroyed by fire, or any theft, or any some losses. That is the expense of extraordinary item. What we are doing, we are debiting or deducting from our profit. So we are adding back here. So insurance company is accepting that one. We are getting some amount from that. That amount, what we are doing the credit side or adding along with our profit. So that deduct here. Okay, and the credited, what are the items? Less extraordinary items already credited in the profit and loss account, that's we are deducting, and then any refund of tax, that also we are deducting from here. So then we are getting what we are getting? We are getting this amount, net profit before tax and extraordinary item, that take into the cash flow statement and go to the next step. Next step, we want to calculate what is the operating profit before working capital changes. These points we want to get the next. We want to go to the next heading, operating profit before working capital changes. How we can move? So from this first this profit, we have to adjust non-cash and non-operating items. Two items are there, non-cash and non-operating item. Non-cash means that depreciation, amortization, like that. That's a no cash flow. That items are we are already deducted. So add back that one. Okay. And next one, what is the non-operating item? That means some income and some expenses that is not related to the operating activity. What's their operating activity? That not related to that one. That may be related to investing activity or related to the financing activity. So deduct from here. Okay, but we did the opposite. Do the opposite. Income already we added, so deduct. Expenses already we deducted, so add. So take one example, profit on sale of machinery or some, or profit on issue uh, securities, loss on issue of securities, like that. So if it is a profit, what to do? We have to deduct from this this stage from their profit before tax and extraordinary item. If it is an expenses means we have to add. Already we deducted, so we are adding back. So like that, we all operating items, so non-operating items are adjusting here, and the concern item where it will affect, show in that activity, outflow or inflow of that activity. Dividend received, which will come in which activity? That will come in the investing activity, inflow of cash, show in the investing activity here. And we paid interest, which activity will come? Paid interest means outflow of cash under the financing activity. So show in the financing activity. Like that, we are adjusting one by one item. What are the items available in our question? That is the financial statement. We are adjusting all other things. That is, operating income and expenses are further show either investing or financing activities of inflow or outflow of cash as per the case may be. And next one, it is next we got this amount. What with this amount? What is the operating profit before working capital changes? From that head, we want to go to the cash generated from the operation. Next head, we want to go cash generated from operation or from the operating activity. What to do for that purpose? We want to adjust the working capital changes. Okay, what to do? We have to adjust the working capital changes. What is a working capital means? Working capital means current asset minus current liability. We can say that is the working capital in the net concept, and the gross concept, current asset itself, we can say that the working capital. Here what we are doing, we will get the current asset and current liabilities from our balance sheet. Okay, balance sheet we will get. So what to do here? Add decrease in current asset, excluding cash and cash equivalents, and increase in current liabilities excluding bank overdraft and cash creditor are added along with which one? Last head we got, that is operating profit before working capital changes. Along with that one, add decrease in current asset and increase in current liability. And next one, what is the increase in current asset and decrease in current liability excluding those items and deduct from there. That time what you will get? You will get that is the cash generated from operation. You will get cash generated from operation that stage. Okay, and then calculate what is the cash flow from operating activities. How to calculate? From the last head, cash generated from the operating activities deducted tax paid. How much is the tax paid? Deduct that amount. That means if the provision for tax is given, 2 years given means current year provision, we are adding back along with our extraordinary item calculation, and then previous year the provision for tax we can take as a tax paid. If any tax given, adjustment is given means we have to draw which account, provision for tax account. At that time we will get the exact amount of how much is the provision, how much is the tax paid amount, etc. Just that one. Here tax paid deduct from that one. Okay, at that time we are getting the which one, cash flow from the operating activities. So from there we want to, that is how much is the cash flow from or cash used in the operating activity. If any extraordinary item is there, we have to add or deduct as the case may be. That means if it is the income or expenses, so based on that one we have to add or deduct, or inflow or outflow, based on that we have to add or deduct. At that time we will get the cash flow from or cash used. Cash used means outflow, yeah. Cash flow from means it is the inflow. Okay, that we are getting cash flow from the operating activities. If any other one item is not here, no problem, leave that item. So next one it is we are going to the cash flow from investing activity. We discussed here mainly investing activities we are getting from the which side of the balance sheet? We are getting from our asset current, sorry, fixed asset side. Okay, fixed asset, what are the fixed assets are there? From there we are getting the investing activities. Okay, and then dividend received, interest received, like that we are getting all items present. All what are the items from the investing activity? Calculate that amount and present there. So that total we are getting. Next we are getting calculate the cash flow from the financing activity. That means that is we are getting from our current equities and liabilities. Okay, share and debenture and loans and advances. From there we will get the idea about how much is there our that is the financing activities. Then dividend paid, interest paid, redemption, all those information we will get from that is equities and liabilities. Relating to the investing activities, all information we will get from our asset, fixed asset category, and then we will get some adjustment or additional information we will get. If we are getting the additional information, we have to prepare concern account. So we will get the clear idea. Afterwards what to do? We got that is a three flows, and then we are calculating the net increase or decrease in the cash and cash equivalents. Add this through what are there? Investing, operating activity total, and investing activity total, and financing activity total. You are only some items may investment, generally investment item negative, and other items will get the positive. That's a no compulsory, that based on the business that will come negative or positive, we can take decision. So then calculate the cash and cash equivalents in the beginning of the year. This will get from our balance sheet, and if any marketable security is there, we have to consider here cash and cash equivalents column should not take as a current asset. Okay, so then add along with this one, this also add along with this item, and then you are getting here a closing balance. Should get closing balance. The resulting amount should be the balance of cash and cash equivalents at the end of the year, matching with the balance as per balance sheet. Okay, this way we are getting the answer. If you are getting the closing balance, cash and cash equivalents is same, our answer, your answer is correct. We finish our cash flow statement. How is the cash flow statement? Is it very easy or difficult? It's very easy topically. Prepare 2-3 times. You can solve the problem very well. Next class we will meet with the one problem. Thank you and have a nice day.